Welcome back to the Pod Slice Daily. I'm Tech Slice.
And I'm CryptoPod.
If you're listening to this on Sunday, November 23rd, honestly, you might be suffering from a bit of whiplash. We spent the last week staring at a sea of red, the S&P 500 nosedive on the 20th, the crypto wipeout.
It was brutal.
Right? But in the last, 48 hours, the script has completely flipped.
It really has. We've gone from the sky is falling to the Fed is folding, essentially overnight. Gold just shattered the $4,100 barrier, that is a massive signal. And we're hearing credible reports of a December cut frenzy coming from the Federal Reserve.
Exactly. So today, we're doing two things. First, we still need to explain why the crash happened, because that mechanical failure in October is actually what set the stage for this opportunity. And second, we are ripping up our old bear case scenarios.
Heck yeah, throwing them out.
Yeah, they're gone. We have a new playbook for the rest of 2025, and it's a lot more aggressive.
Okay, let's start with the autopsy of the crash, just so everyone understands the playing field. It basically all goes back to October 10 and the tariff tantrum.
Right, the macro shock triggered a panic. But, as we've discussed, standard selling doesn't cause a 20% wipeout in hours. That was ADL. Automatic Deleveraging.
For the listeners joining us late, normally an exchange has an insurance fund to cover bankrupt traders. But on October 10th, a pricing error with the USDe stablecoin caused a $19 billion liquidation wave that it drained those funds instantly.
And when the insurance fund runs dry, the exchange triggers ADL. They forcibly close the positions of winning traders to cover the losers.
Correct. It wiped out the market makers, the liquidity providers. That created a liquidity vacuum. That is why the stock market felt so fragile on November 20th.
But here is the pivot point. That flush is over.
Precisely. The leverage has been washed out. And now the common thread we talked about, the link between MicroStrategy and IBIT, is acting as a slingshot in the other direction.
Let's talk about MicroStrategy for a sec. We were watching that $74,463 level, their average cost basis.
We were, and yesterday, despite the panic, MicroStrategy held key support. The premium collapsed from 2.5x to 0.8x NEV. That means the leverage is gone, the stock is reset, and with gold crossing $4,100, the market is screaming that the dollar is getting devalued. Bitcoin and MicroStrategy are next in line to front-run that liquidity.
So the board is reset, the Fed is scared, gold is flying, and leverage is zero. Let's look at the new scenarios for December.
We have updated the probabilities significantly based on the weekend's data. Scenario 1, the bull case. We call this the December frenzy. Probability up to 60%.
60%? That is a big shift from our last episode.
Look, the data demands it. The Fed has blinked. Gold over 4,100 is the canary in the coal mine. It tells us the market knows a liquidity hose is turning on. The outcome, we expect the Fed to cut aggressively in December to save the repo market. Stocks and crypto will front run this. We could see new all-time highs by Christmas. Strategy, aggressive accumulation. The flush was the buy signal.
Okay, and scenario 2?
Scenario 2 is the neutral case. Stabilization. Probability is sitting at 30%. This is where the Fed cuts, but the damage to the market maker balance sheets takes time to heal. We trade sideways, but the downside is capped. It's a stock picker's market. Strategy here is range trading. Buy support, sell resistance.
And the bear case?
Scenario 3 is policy failure. This probability has dropped to 10%. This is now the outlier. This only happens if the Fed's cut is seen as like a panic move that breaks confidence. But given the strength of gold, the market wants the liquidity so too much to reject it.
Okay, all right, CryptoPod, the defensive crouch is over. Give us the new strategic guide for the rest of 2025.
Rule 1. Buy the fear, but spot only. The ADL event flushed out the leverage. The market is cleaner than it has been all year. Use this dip to accumulate high-quality assets, but stick to spot. Volatility will still be high, and you don't want to get shaken out by a wick.
Rule 2. Follow the gold signal. Gold crossing $4,100 isn't just a number, it's a regime change. It signals that real assets, real estate, gold, and Bitcoin are the place to hide from currency debasement. Serious warning, if you aren't allocated to hard assets, you are basically shorting inflation.
Rule 3. The MicroStrategy Rebound. With the premium reset to 0.8x NEV, MicroStrategy is offering discounted Bitcoin exposure for the first time in ages. As long as that support holds, it's a high beta play on the Fed pivot.
Rule 4. Position for the wave. Don't wait for the press conference. By the time the Fed chair speaks in December, the move will be 20% higher. The market moves on the rumor, and the rumor is screaming buy.
The bottom line, the plumbing was clogged, but the Central Plumber just walked in with a wrench and a bucket of cash. The liquidity is coming back.
You heard it here first. Get ready for the December frenzy. Stay safe, trade smart, and we'll see you on the upside.
This podcast represents a collaborative effort between human creativity and artificial intelligence.
This content is for informational and entertainment purposes only. Trading stocks and cryptocurrencies involves a high degree of risk. You should always perform your own due diligence or consult with a qualified professional before making any investment decisions.